Hello, welcome to DecentraLounge, brought to you by GlobalStake, your institutional SOC 2 Type 2 certified, truly decentralized bare metal staking service provider. In today's episode, we're joined by Armando Aguilar, co-founder and GP at Aztlan Capital. Before Aztlan, Armando began his career in investment banking at Natixis and BNP Paribas. He made the jump over to the digital asset world at Fundstrat, eventually moving to the venture side with a few different roles in capital formation and business development before starting the fund in 2023. In our conversation, we'll talk about the fund, which is focused on Latin America and emerging economies, highlighting which products and services are resonating and pick up traction in those markets. And then we'll also dive into how he formed his thesis and what he's most bullish or bearish about in today's ecosystem. Armando, we're excited to have you on the show today. Let's just kick things off with your background. What got you into crypto and how that journey has led to where you're at today?
Hi, Miles and Ryan. Thank you for having me here. Yeah, a little bit of my background. So I was born and raised in Mexico, call it the capital of tequila and tacos. Moved to the U.S. at the age of 9. First cultural shock, Boise, Idaho. My dad got stationed there for Intel. Left Idaho in 2018 to go to college in Oregon, and then eventually made my way to New York to finish college and start my career out here. I guess since early on, my whole focus has been in Latin American emerging markets. So I started capital markets at Natixis BCPE, which is a French bank covering all Latin America clients. That included governments, quasi-sovereigns, financial institutions, and corporates, which then I made my way to BNP Paribas. So I was helping the team lead all the bond issuances for the region as well, where we did over 30 billion in combined volume during my time there. It was really interesting times to see how the capital market shifted pre-COVID, post-COVID, and a lot of green energy ESG transitions. During this whole process, I think I started dipping my toes actually into the digital asset space back in 2014. I got introduced to it by a couple of friends. And the reason behind it is I used to send remittances back home to Mexico. The main issue that I always had was the cost relative to the amounts that were sent were quite high, in addition to always having money getting lost, right? So sometimes couldn't find the money for a week or two. And it made it difficult, right? Especially in times of emergencies when you needed to send money back home. Just couldn't rely on the service providers, right, at the time. So fortunately, we were able to find somebody that could off-ramp us back in 2014 locally, and that's how I started sending remittances via Bitcoin to my family. Ever since then, I kept into the space leading up to the 2017 ICO era, right? So got early into a lot of the protocols there, everything from BNB, EOS, and everything in between, right? I think this kind of picked up my interest additionally as I began doing a lot more research into these protocols, right? And what really fascinated me was the problems that they were solving, right? And coming from traditional finance, just seeing kind of the clunky systems, the bureaucracy, the lack of transparency that just creates inefficiencies, to say the least. Fast forward, decided to leave traditional finance and went on to Fundstrat, where I was helping the team under Tom Lee kind of build that one of the first institutional research houses here in New York City, right? So we had the mandate of doing strategic institutional research for clients like Avalanche, Cardano, a few VCs. And with this, just beginning to see kind of the ecosystem from both perspectives, right? From the investor institutional side, but from the pure ecosystem and foundation. So really decimating the information to make it simplified an investment thesis for the institutional investors. So did extremely well there, built the whole team out. We had a lot of clients. I get poached to go to Ledn to lead their structured products and alternative investments. So at Ledn, great company that I work with is pretty much building structured products, which were in-house DeFi, Bitcoin-backed loans, Bitcoin-backed mortgages, and similar products, right? Today, Ledn is one of the biggest Bitcoin-backed lenders. I would say top 3 in the industry. Then during my time, unfortunately, we had 3AC, Terra Luna, just really coming in and destroying the market, to say the least, right? The market just really took a big hit. And with that, you had big institutional players that came down with it, right? So that was Genesis, DCG, among others. So faced that pretty much that drought during that time with that market slump, and then kind of a bear market for a while. And then decided to move on to the VC side. So I joined LightShift Capital to pretty much help them on the investment sides, leading everything in the Americas. So it was always with the sourcing, whether it's the due diligence process, being close to the communities, the developers, and developing the thesis of being a developer-first fund, where we really have our in-house resources coming in to accelerate the product market fit of these products that we invested in, right? So think of it as becoming a third founder into the team that really helps them in-house. This was extremely good. Really enjoyed it until I broke my collarbone, ETH Denver. So I had to take some time off. And during my time and thinking is the big issue of there's a lot of concentrated capital in North America, Europe, Asia, which you have a lot of great founders. The one thing that I realized is that Latin America, Caribbean, and other emerging economies don't necessarily have this access to capital or resources, right? So where you have your highest level of product market fit products, there's not enough access, right? So access to capital, access to resources. So one clear example that I can tell you is a lot of the founders from Latin America end up going to San Francisco, Y Combinator, et cetera. They have to travel outside of their region or their country to be able to have an equal opportunity, right, on the playing field to go and have access to capital. Why that becomes difficult from our thesis perspective is if we're able to source them, we're able to help them accelerate from the point or the moment that we find them locally at, call it a 10 million valuation. Then once they step into San Francisco or Asia, then that valuation for the same product at the same stage, it's a multiple higher, right? So for us, under our thesis is how do we, one, source these products that are needed, right? That the locals are using, that have a product market fit, that are generating cash flow, and then support them to then help them with regional expansion and then eventually international expansion, right? So I think for us, that for me, that was kind of the biggest problem, seeing that there's just a really large void in the VC funding space for emerging economies and founders. So that's how pretty much Aztlan came to be, right? So the name Aztlan comes from the Mexican Aztecs, and it pretty much means the first city of innovation, right? That's where innovation, where Tenochtitlan, and then pretty much the Latin America civilization came about, right? And it's really interesting because the way we see it is it was the first opportunity for any innovation and growth to happen really out of Mexico back in the day, right? If we go way back. So that's where we wanted to kind of center our name and then our thesis. Our thesis is coming in, finding this projects or outlier founders that are building something that is really solving an issue. We're not looking for the next 1,000xer to say, but we're looking for something that can really help, for example, the underbanked, right? Or the unbanked in Latin America, where close to 45-50% of the population doesn't have access to the most basic banking services. And if we're really thinking about growth on a per capita basis, Latin America is quite rich, right? In that sense. But unfortunately, capital is not able to be deployed efficiently and into opportunities just because of the first lack of basic infrastructure into the financial services. So for us, our thesis is focus on blockchain-enabled services that can create efficiencies transparencies, and reduce cost and friction with the end user, right? This could be a blockchain-enabled services, call it, I don't know, like a fintech, new bank that eventually became one of the bigger juggernauts out of the region by offering a simple step process of creating a digital bank, if you can think of it. And within that, you enable a blockchain service, whether it's buying, selling a crypto or a credit score on chain, things of this nature, right? So we focus a lot of existing business models that have a proven business model that can be cash flow generating, where we can now integrate blockchain. So this is the type of companies that we invest in. And the second would be these crypto native institutions that can help accelerate the adoption across other industries, right? So something in this nature could be, as we mentioned, right, a credit score that can then new bank can use on chain, that Banco Nacional de Mexico or other institutions, for example, can use, right? And this becomes really important as you're trying to develop an e-commerce or a digital economy in that sense, right? If we can think of it in the perspective is, let's just go straight to remittances. Mexico, last year alone, 65 billion of transacted volume, right? Yet still, as I mentioned, it's very expensive, inefficient, where now you have players like Stellar, Ripple coming into the space, Bitso, and offering this from a seamless basis of a digital currency, right? Whether it's a stable coin, a crypto, where now you offer the on-off ramping, the spending via wallet. And this is how you start creating kind of the foundation for an economy to thrive, right? You've taken up the roadblocks of financial infrastructure problems, access to banking products, where everything is pretty much accessible through something as simple as using a phone. So that's where we focus a lot. In addition to that, we have a full advisory arm, and we've been very lucky to have a lot of clients coming on board. And a lot of this on the advisory side comes from the perspective of we want to tap into emerging market regions, right? We see a lot of growth, a lot of opportunity, but the problem is a lot of these companies don't know the region, don't have boots on the ground or the expertise. So that's where advisory services have come in, where we pretty much hold the hand of our clients and we can think of it from a strategic perspective. Are we doing business development, go to market, market penetration? Are we setting up local teams so that we can start building up the sales locally, getting business in? Or are we looking to target this region for growth, right? Whether it's an ecosystem who's looking to have adoption with developers locally, partnerships with governments and the likes, right? So that's been one side of our business that has been booming, and we've been very fortunate to be doing well, especially with the demand of stable coins into emerging economies. I think that's been the biggest case that we've seen. In addition to that, it's the ancillary businesses that can come in through adopting blockchain services.
Awesome. And I think being on the ground has a lot of positives. Previously, if a founder had to move out of the country they were operating in to go to SF, it takes them away from the people that they're building services for. With your model and thesis, do you see that the teams that you invest in are able to move faster because they're able to focus on having customer conversations and being close to the people that are actually using their products and services?
Yeah, we've seen this very clearly. One example could be El Dorado. This is a kind of a peer-to-peer payments, remittances platform. So, for example, the team being in the US wasn't initially as helpful. They did Skydeck at UC Berkeley, for example. Again, building in the US because the lack of resources locally. They were able to build the product. They got funding from, example, Multicoin, other big VCs, to then go and directly tackle the issue of movement of capital. They started with Venezuela, where they amassed over 1 million users. And yes, being locally on the ground, you understand what really happens, right? So one thing with Venezuela is the vintage of fiat. There's to my knowledge, three different vintages. And unless you're locally, you don't know what each one has a value, right? So the older vintage, even though let's assume it's $1, Venezuelan dollar, is worth 40 cents. Second vintage is worth 60 cents, and the third vintage is worth one-on-one par, right? So unless you know this, it becomes very difficult, right? You start looking at the same thing, like the old bills that anybody takes here for us, because it's a bill, right? Like $100 bill, the old Benjamins with the circle face. If you go to Argentina, those are taken at 2-3% discount. Why? It's how it works, right? I guess it becomes more difficult for central bank to recycle them, if my understanding is correct. But stuff you don't see here, right? So unless you're locally there to understand the pain points, the roadblocks, what needs to happen, then a team does not become agile and is not able to deliver that growth, tackle the problems that are actually affecting those locals. And I think that's one reason that a lot of the foundations that come to us, for example, and say, hey, let's say I'm the Solana Foundation, we really need to solve this issue doing this. How do we get there? Do we go through a country-specific approach? Do we do a regional base? And then once we're there, what are some of the challenges we might face? What should we be preparing so that we provide the resources actually for these founders to really go and tackle these issues, right? So yes, being local on the ground, extremely important. And it's the only way that you really are able to see that the tangible need of these products on a blockchain perspective, right? Using the tech that really eliminates these barriers and accelerates this growth and adoption.
Just thinking about these builders, Armando, this has been a fascinating conversation, especially I was a former geography teacher. So I love talking about LATAM and Africa because they're such young, like continental areas, so many people who are just really hungry for change and looking for that. So do you see a lot of the builders that you're talking to that they're very young, they're willing to adopt blockchain technology? You talked a lot about just the difference in bills and, how stable coins, which clearly have become sort of the de facto number one RWA in crypto right now, right? It's clearly the use case that everybody's hungry for. Just today, the day we're recording, we actually we saw that I think Amazon and Walmart both want to issue their own stable coin. So this is really changing the entire space. So curious for your take for just like how much you see this culturally shifting across just the region that you're working in. Is it something that everybody, kind of that's under a certain age is really sort of moving toward? And this is where you're getting so much traction mostly with the builders that you're talking to and working with?
Yeah, so definitely the young population founders are kind of the driving force. But again, adoption, if you think of it, is population out of Latin America. I would say the majority of it is on 25 over, right? So that means that a lot of the products that are being built are geared towards kind of a non-crypto savvy crowd. If we start thinking from the perspective of money transfer, right? So for example, Tron is the dominating chain out of Argentina, right? Polygon being a big force in Brazil and so on. So I think it's making it simple, right? And then what has been done to make sure that somebody like my grandma or a 32-year-old or 25-year-old who doesn't know about crypto and swapping and bridging can do it in a simple UX UI manner. And there's companies that have done this and they've done it extremely well. Bitso, Lemon Cash, for example, right? Where now you're able to just deposit. And there's a company called Balam where you're able to send remittances via WhatsApp text message. There's a fintech that's doing on the opposite side, which is crypto called Felix, right? Very traditional fintech, but now stable coins are being added on the back. But one interesting thing that we think is, or we've seen in a majority of our clients coming to us is not just creating another stable coin or doing another, value of transfer on a digital base, right? I think the biggest thing is distribution. And that's why, for example, Tether has dominated emerging markets and will continue to do that because they've done such an amazing job on distribution, right? At the end of the day, if you think of it, right, a lot of companies try to come in with their stable coin, but without the proper distribution and the stickiness to it, which again, it's creating the foundation for spending it, having usage to it, it becomes kind of a null game, right? Where no matter how much you're trying to push, you're going to spend, but it's not going to stay or have that stickiness to it. And one interesting thing about, for example, Latin America and Africa, everything is very referral based, right? So usually somebody in the family starts using it, gets referred, and then they stick to it, right? And then it becomes very difficult for anything else to come into play. So I think that's been kind of the interesting thing. And I know like a lot of other companies are trying to do their stable coins, but I think what we're seeing, at least, there's going to be a balance or a mix of a couple of things. Their own stable coin, which they will try to push for distribution, but also partnerships where they can actually receive other sources of crypto or stable coins, and then just have a revenue sharing model. Because there's so much flow that it makes sense to just take Tether, for example, at any 7-Eleven, Oxxo in Mexico, Walmart, you name it, right? So I think that's where it's converging towards. And I guess it's, again, distribution, and that's what we've seen a lot of our clients coming to us for this.
A big part of distribution, the infrastructure that allows for a wide reach. And so in the US markets, European market, a lot of the infrastructure being built is reworking existing frameworks to be built on top of blockchain. In emerging markets, are there any different nuances, or is infrastructure having to be built from the ground up that doesn't currently exist? And is there a specific piece of infrastructure in your mind that you look at and say, if this were to come to market in the next 1, 2, 3 years, it would create a boom for onboarding 1 billion people into the crypto world?
Yeah, definitely. I think that's a very good point that we always have conversations around, right? So if you think of it in a developed economy, having a digital dollar, digital euro, it's just another thing. It's having another app like Cash App, Venmo, PayPal. It's a way of transferring. It's seamless, right? But if you go outside of these developed economies, the first thing that you want is to be outside of your local currency into dollar. So that means, or a euro, right? A safer denominated fiat, right? So for somebody in Argentina is immediately having access to a stable coin that's US denominated, for example, right? Because of the high inflation, Venezuela, same thing. So the infrastructure, I think it's been leaped. I think the US has been very fortunate in other developed economies where you have a lot of talent, but again, it's a iteration of something that already exists. A lot of these economies, unfortunately, emerging economies, don't have that. But thankfully, they're leaping a lot of this infrastructure that has been built in other economies, right? So things that you're seeing, for example, with the underbanked and emerging economies, it's now you can have a peer-to-peer wallet and an off-ramp. You no longer have to write a check. You no longer have to have a physical debit card, or you don't have to apply and have a credit score to get credit. It's being built and leapfrog on the infrastructure of blockchain, which we find extremely efficient. That's how you're onboarding a lot more users than you would have done traditionally through traditional fintech or infrastructure. And I think you saw the first iterations of this with, for example, again, I keep bringing Nubank, but the way they grew relative to the local banks and regional banks in Latin America, as an example, is making something simple via phone, right? As long as I have internet signal, I can have transfer of value coming, and then having utility by being able to spend online through a virtual wallet, things like that, right? So now users are formally being onboarded, one, and second, they're able to be included into this spending economy, right? Or earning economy as well. So I think the infrastructure, again, is being leapfrogged via blockchain, which I think has been a very good thing. And it's definitely onboarding millions of new users.
This has been an incredible conversation, Armando, just in terms of, and especially getting this specific view on developing regions, whether it's LATAM, especially, and just the leapfrogging, which is something that we see quite commonly when a lot of this is happening. But there's clearly so much that's happening right now, and I'm sure people want to stay in touch with you and get some developments or maybe reach out. So, like, what's the best place, like, for them to find out more information about Aztlan Capital or you specifically? Like, where do people follow along? What's your website? So we can make sure we link all the socials to the episode.
Yeah, definitely. So best way is email and Telegram. Email would be admin@aztlan.capital. And then our Telegram handle is Aztlan_capital. We have a website, as we mentioned. We have social, so LinkedIn, as well as Forecaster and everything else. So you're able to find us there. A lot of the work, again, that we're doing is really center around access for these regions. So we have clients who are stablecoin issuers, clients that are doing infrastructure, clients that are ecosystem foundations. So that's on the advisory side. Other than that, is we have within our website pretty much a form that you're able to submit your projects, and then what we do is try to work with these founders to one, help them raise, and then second is if they need help more on the growth perspective, right? That's their BD, go to market, and market expansion. So that's a lot of the work that we've been doing. We're doing it for quite some time, and again, we're very thankful that these regions are really fast growing and there's a lot of interest and demand, which has been good for us. And again, we're just very thankful for it.
Awesome. Well, I know we're excited to follow along with the journey. We'll make sure to link all of your socials, websites in the description for everybody listening along. That's it for today's episode. Huge thank you, Armando, for joining us, sharing your insights on LATAM, emerging markets, Aztlan, and just the infrastructures that's being required to accelerate adoption of crypto around the world. For those listening on Apple Podcasts, Spotify, or YouTube, thank you for listening and watching. We'll catch you next time on another episode of DecentraLounge.
Take care, everybody.
Thank you very much. Take care.